a company that's effectively building the very foundations of our AI future, brick by digital brick. Yet, despite its monumental impact, you might not see its name plastered across every tech headline like some of the, flashier players. We are, of course, talking about Supermicro Computer, or SMCI. Welcome, curious minds, to another deep dive. Today, we're cutting through the noise, going beyond the buzzwords to really understand the quiet giant that's underpinning the artificial intelligence revolution.
That's absolutely right.
Yeah.
When the world thinks AI, the immediate thought often jumps to the groundbreaking chips, right? Like NVIDIA's powerful GPUs.
Yeah, the brains of the operation.
Exactly. But what happens after those chips are designed? They don't just magically compute on their own. They need a robust, specialized home, a meticulously engineered infrastructure to run at the scale required for today's massive AI models.
Yeah.
And that's precisely where SMCI steps in, designing and building the literal racks, servers, and cooling systems that house this AI future. Our mission today is to unpack exactly how this company has not only carved out, but also, solidified this absolutely crucial niche.
Right.
We'll delve into what their financials truly tell us beyond the surface numbers, and most importantly, what the future might hold for this indispensable, yet often overlooked, player in the technology landscape. We've compiled insights from their latest financial reports, in-depth industry analyses, and company profiles to give you a truly comprehensive, all-encompassing understanding.
Okay, let's really unpack this then. Imagine a company that has seen its revenue more than double in a single year. And not by selling some trendy new app or a consumer gadget, but by providing the core infrastructure that powers those very innovations. This isn't just about moving boxes, right? It's about providing the high-performance, energy-efficient backbone that allows the most complex AI models and data-intensive workloads to actually function, to learn, and to scale. It's like the unsung hero enabling the computational miracles we hear about every day.
That's a great way to put it.
Okay, so here's where it gets really interesting. Because every tech titan, it seems, has that almost mythical garage story, right? A humble beginning that somehow belies future greatness.
They do, yeah.
Well, SMCI's journey echoes that Silicon Valley classic, but with a foresight that truly sets them apart. Their story began way back in 1993 in San Jose, California, founded by Charles Liang, an engineer with a very distinct vision, alongside Yishan Liao, Sarah Liu, and Chu Liang.
That's right.
And it wasn't just about making computers, it was about building better computers from the start.
Indeed. Charles Liang, with his deep engineering background, established a foundational philosophy very early on, a relentless focus on technological innovation, specifically in what he termed green computing and modular server design.
Green computing. Back in the early 90s. That wasn't really a thing people talked about much then, was it?
Not at all. Not in the mainstream. Most companies were just chasing raw speed and processing power almost at any cost. But Liang saw a different future. He understood that simply making faster computers wasn't sustainable in the long run.
Interesting.
The true challenge, he saw, would be making them more energy efficient, capable of managing immense heat and power demands. This was, frankly, remarkable foresight, especially given today's immense power consumption of AI models.
Absolutely.
He recognized that scalability would hinge not just on raw horsepower, but on the ability to manage that power efficiently, to reduce heat, minimize energy consumption. I mean, this vision was revolutionary for its time and now positions them perfectly for the demands of the AI era.
So what does this foundational philosophy mean for you, the listener, trying to grasp their secret? This building block approach to server design, that modular architecture you mentioned, is not just a technical specification, is it? It sounds like their profound secret sauce.
It really is. Imagine, if you will, advanced Lego blocks, but for data centers.
Okay, I like that analogy.
Instead of having to redesign an entire server from scratch, every single time a new, more powerful chip hits the market, SMCI can rapidly swap in new components, adapt existing designs, and get cutting-edge products to market at lightning speed.
So flexibility equals speed.
Exactly. This inherent flexibility allows for rapid customization and seamless integration of the absolute latest technologies. It gives them a crucial time-to-market advantage. In a sector where even a few months can mean the difference between leading the pack and, well, being left behind, that agility is a massive, almost unfair competitive edge.
So they're not just riding the AI wave. They are, in essence, building the surfboards in real time, custom made for the biggest waves.
Precisely. Their agility is a significant differentiator in this fast-paced, often frantic AI hardware market. While larger, more traditional competitors might take significantly longer for full platform refreshes, SMCI's modular approach means they can quickly adapt their designs. They can incorporate the newest GPUs, for instance, from partners like NVIDIA, or the latest processors from Intel and AMD as soon as they become available. This isn't just about speed, it's about being consistently at the bleeding edge.
Always having the latest and greatest ready to go.
Offering solutions optimized for the most advanced chips as soon as they are ready for deployment. They went public back in 2006, and that early, almost prescient bet on liquid cooling solutions has truly paid off in spades.
Liquid cooling. Yeah, you mentioned that. That seemed like a niche thing for a long time.
It absolutely was. Years ago, liquid cooling was considered almost exotic, reserved for supercomputers or highly specialized scientific applications. But their unwavering commitment to it, even when it wasn't a mainstream idea, has positioned them perfectly for the current unprecedented demands of AI.
Because traditional air cooling just can't keep up.
It just can't keep up. Not without consuming exorbitant amounts of energy or requiring vast, expensive data center footprints. SMCI was ahead of the curve, anticipating a thermal bottleneck that is now a critical necessity for scaling AI infrastructure globally. They didn't just adapt, they innovated and led.
That's fascinating. So we understand their roots and their philosophy, modularity, green computing. But let's get down to brass tacks. What exactly makes SMCI so indispensable in the AI space today? You mentioned they build the home for AI chips. Can you elaborate on their flagship technology? Why is it so critical right now?
Absolutely. SMCI specializes in high-performance, GPU-optimized servers. Think of their products not as generic computers, but as the finely tuned, precision-engineered engines powering the AI revolution.
Okay, like specialized engines.
Exactly. They're designed from the ground up with obsessive attention to detail to integrate the most advanced GPUs, like NVIDIA's groundbreaking H100, H200, and the new GB200 Grace Blackwell systems.
The really powerful stuff.
The absolute top-tier stuff. These aren't just off-the-shelf servers. They are specifically engineered for the unique and incredibly demanding needs of AI and data-intensive workloads. This includes providing the necessary power delivery, the advanced cooling we just discussed, and high-speed interconnectivity.
All to make sure the chips run at their best.
To ensure these chips don't just run, but operate at their absolute peak efficiency continuously for years. This specialization is their core differentiator. They're not merely selling commodity hardware, but highly optimized, purpose-built machines for the AI era, almost like custom race cars for data.
And what about this liquid cooling solution again? It sounds almost sci-fi, or like a high-end gaming PC taken to an extreme. Why is it so critical now, and how does it actually work in practice for these massive AI operations?
It's becoming absolutely essential, and you're right, it does feel a bit futuristic. The latest AI accelerators, those powerful GPUs, generate immense heat. We're talking the kind of heat that could practically, cook an egg, and they consume vast amounts of power. Trying to cool a densely packed rack of these chips with traditional air cooling is like trying to put out a roaring bonfire with a squirt gun. Air cooling simply isn't efficient enough.
Right, not for that kind of density.
Not without requiring massive data centers with exorbitant energy consumption for air conditioning. SMCI's focus on direct liquid cooling, DLC technology, is a game changer. It allows for high-density AI data centers to operate much more efficiently and sustainably.
How does it work? The liquid part.
Instead of air, a non-conductive liquid is circulated directly over the heat-generating components, the GPUs and CPUs. It absorbs heat far more effectively than air ever could.
Direct contact.
Precisely. This precision cooling allows for more powerful chips to be packed closer together, leading to vastly greater computational density within a smaller footprint, and crucially, a significant reduction in overall energy footprints.
So it's efficiency and density.
It's not just an efficiency play to save on electricity bills. It's a fundamental necessity for scaling AI infrastructure without running into debilitating thermal or power limitations. Analysts even project that a staggering 30% of new data center spaces will adopt DLC by 2026.
30%? That's huge.
It directly addresses the sustainability challenges posed by the rapid expansion of AI, turning a massive problem into a solvable engineering feat.
So it's not just about the physical hardware then, right? Because for a learner like me, an end-to-end solution, something that manages all this intricate power and data, sounds much more compelling than just selling sophisticated boxes. Do they offer software to manage all this power, or is it purely a hardware play?
You've hit on a crucial point that truly elevates their offering. They absolutely do. SMCI offers a comprehensive server management software suite that significantly enhances their hardware offerings, providing that seamless end-to-end solution you're looking for.
Okay, so what does that include?
Well, there's Supermicro Server Manager, SSM, which allows IT teams to oversee vast fleets of servers from a single centralized interface. Really simplifies complex operations.
Takes sense for large scale.
Then there's Supermicro Power Management, SPM, specifically designed for optimizing energy efficiency, directly complementing their green computing philosophy, and essential for controlling those ever-increasing operating costs.
Right, tying back to the core idea.
They also have Supermicro Update Manager, SUM, for streamlined firmware and software updates, ensuring systems are always current, secure, and performing optimally with minimal downtime.
Keeping things running smoothly.
For flexible cloud infrastructure management, they offer SuperCloud Composer, enabling flexible deployment and scaling of resources, which is critical for dynamic AI workloads.
Adapting to changing needs.
And finally, SuperDoctor 5 provides crucial system health monitoring and diagnostics, preventing issues before they become critical. These integrated software tools enable them to provide a holistic, end-to-end solution.
The whole package.
Making them a preferred choice for complex AI and large-scale data center applications as they drastically simplify deployment, management, and maintenance. Ultimately saving customers significant time and resources. It really is the total package.
Knowing what they build, the next big question for us, the learners, is who's actually putting this cutting-edge technology to use? Are we talking about the absolute biggest names in tech, the ones shaping the AI landscape? Because if you're building the literal infrastructure for the AI revolution, you must have some seriously heavy hitters on your client list, even if they're not exactly shouting it from the rooftops.
You're absolutely right to ask that. And while specific client names are often shrouded in confidentiality for very good competitive and strategic reasons, of course.
Sure, NDAs and all that.
Exactly. SMCI's customer base absolutely spans the major players who are defining the future of AI. Their servers are utilized by a wide range of industries, from the largest cloud service providers and hyperscalers, the companies that effectively rent out computing power.
The big cloud names.
Yes. All the way to massive enterprise customers in diverse sectors like finance, healthcare, manufacturing, scientific research. These are organizations with immense computational needs and an imperative to leverage AI for rapid innovation, competitive advantage, operational efficiency.
So yeah, you are unequivocally talking about the absolute biggest names in the global tech and enterprise arena.
Without a doubt, even if their direct infrastructure suppliers are not always publicly declared.
Can you give us some concrete examples then? Even if they're not explicitly named by SMCI themselves, it really helps us, the learners, to put a face to the technology and understand the sheer scale of their impact.
Certainly. Through industry reports and analyses, it's known they are a key supplier to several prominent AI-focused companies. They've been mentioned repeatedly in the context of providing infrastructure for the most demanding large-scale AI training and inference.
Okay, like who?
For instance, it has been widely reported that Meta Platforms is not just considering but actively evaluating Supermicro immersion cooling racks for their new AI data centers.
Meta. Wow, that's serious evaluation.
Very serious. It indicates a deep look by one of the largest tech companies on the planet for its next-generation AI infrastructure, really underscoring SMCI's leadership in advanced cooling.
Okay, who else?
Furthermore, there are strong reports that the xAI Tesla 100,000 GPU Colossus supercluster. I mean, just think about that scale.
100,000 GPUs, that's astronomical.
It's an absolute beast of computational power. And it's reportedly built upon Supermicro HGX servers. That highlights the unparalleled scale, trust, and performance placed in SMCI's capabilities by one of the most ambitious AI ventures out there.
Incredible.
And for a behemoth like Microsoft, their Azure Stack and Windows Server offerings are pre-certified with SMCI's turnkey clusters and edge boxes. That shows deep foundational integration into their sprawling cloud ecosystem.
So they're embedded pretty deeply.
Very deeply. Even major cloud providers like AWS and Google Cloud are widely understood to be among their clients, though direct announcements are rare.
Right.
And the whispers in the industry strongly link them to leading cutting-edge AI startups like OpenAI, Anthropic, and Inflection AI. companies that are at the bleeding edge of AI model development, requiring precisely the kind of specialized, high-performance, scalable infrastructure
that only SMCI can provide with that kind of agility.
Exactly. This extensive, albeit often confidential client list underscores their absolutely vital central role across the entire AI spectrum.
That's quite a roster. Truly impressive. It sounds like their strategic partnerships are also key, especially when you're dealing with the almost dizzying pace of innovation in AI chips. It's a game of constant upgrades, isn't it?
Absolutely crucial. Their partnership with NVIDIA is, without exaggeration, a cornerstone of their entire AI strategy.
That NVIDIA connection seems vital.
It's symbiotic. It ensures they are among the very first to market with systems exquisitely optimized for the latest GPUs. They even engage in joint go-to-market strategies on liquid-cooled systems.
So they work together on selling them too?
Yes, collaborating not just on engineering, but on how to bring these complex solutions to customers. This means as soon as NVIDIA releases a new, more powerful chip, SMCI is ready with a compatible, fully optimized server solution, often significantly ahead of larger, slower competitors.
That speed advantage again.
Always. They also have robust, long-standing collaborations with Intel and AMD, integrating their cutting-edge processors and GPUs into their diverse product lines, giving them broad market reach.
So they work with all the major chip players.
They do. For instance, DigiPower X Inc. recently placed a significant purchase order specifically for NVIDIA-based servers from SMCI, reinforcing this dynamic partnership ecosystem. This unparalleled agility in these deeply integrated, close partnerships allow them to be a quintessential picks and shovels beneficiary of the massive ongoing AI capital expenditure boom.
Right, the picks and shovels play. In a gold rush, sell the tools.
Exactly. Everyone focuses on finding the gold, the next big AI model, but the real consistent winners are often those selling the indispensable tools. SMCI is selling the specialized high-performance tools absolutely needed for the AI gold rush.
Regardless of which specific AI ultimately wins out.
Precisely. They're indispensable.
All right, let's talk numbers. When you're trying to truly understand a company, especially one at the heart of such a booming sector, the financials are the unequivocal key. What does SMCI's balance sheet tell us, particularly given its meteoric, almost unbelievable, rapid growth?
It tells a compelling story of absolutely staggering growth, but, and this is important, it's intertwined with significant volatility. That's a critical nuance for any investor or observer to grasp.
Volatility, okay. How so?
Well, as of late July 2025, SMCI's market capitalization has varied quite dramatically across different reports and analytical firms. You see figures like approximately $80 billion, then maybe $50 billion, and even around $30.5 billion to $30.9 billion.
Wow, that's a huge range, like tens of billions of dollars difference.
Exactly. And that wide range isn't just a quirky data point. It's a living testament to the roller coaster ride that is SMCI stock. Imagine a company whose valuation could swing by the size of a small country's GDP in months.
That's intense.
This kind of variance isn't uncommon for high-growth, high-data stocks in a rapidly evolving speculative sector like AI infrastructure, but it consistently places them as a very significant player. They are a genuine force in the market.
That huge variance really emphasizes the volatility. What about their most recent performance in terms of sales? How are they trending? Is the growth consistent?
Okay, so for the third quarter of fiscal year 2025, ending March 31st, 2025, SMCI reported net sales of $4.6 billion.
$4.6 billion in a quarter.
Right. Now, to put that in perspective, this was a significant jump from $3.85 billion in the same quarter last year. So unequivocally strong year-over-year growth.
Okay, that's solid growth.
However, it was a decrease from $5.68 billion in the immediate prior quarter. The company attributed this quarter-over-quarter dip primarily to the timing of new product introductions and, crucially, some customers strategically delaying deployments, maybe as they evaluate next-gen platforms like NVIDIA's Blackwell.
So the timing of big deals can make things lumpy quarter to quarter.
Exactly. Large infrastructure deals aren't always smooth quarter-on-quarter increases. They're big projects that can shift timelines.
So a slight dip quarter over quarter, but still absolutely strong year over year. What about profitability? Are they efficiently turning that rapidly growing revenue into actual profits, or are they sacrificing margins for market share?
Good question. Their gross margin for that quarter was 15.4%. Now, that was a slight dip compared to 17.7% in the prior year's corresponding quarter.
Okay, a small dip in margin.
While a modest decrease, it's generally within the expected, albeit often tight, ranges for hardware businesses. Net income stood at a robust $402 million, and diluted EPS was 6.56.
$402 million profit in the quarter.
Yep. Looking at the bigger picture, their full fiscal year 2024 revenue was an astounding $14.99 billion. That's an impressive 110.42% increase from $7.12 billion in 2023. Just explosive top-line growth.
Doubled revenue in a year. Incredible.
With that, net income hit $1.15 billion, up 80.10% from the previous year. Their trailing 12 months TTM revenue, that's their sales over the most recent full year, giving a smoother view, is around $21.6 billion.
$21 billion, wow.
Signaling continued incredibly strong top-line performance. These numbers collectively demonstrate a company not just growing, but growing rapidly and crucially profitably, despite the inherent challenges of the hardware sector.
Wow, those are some serious, genuinely eye-popping growth numbers. How about their future outlook? What are management and analysts projecting for the coming quarters and fiscal years? Are they seeing this momentum continue?
Management is remarkably optimistic. They're indicating strong confidence in their market position and product pipeline. For the fourth quarter of fiscal year 2025, ending June 30, 2025, Supermicro projects net sales to be in the range of $5.1 billion to $5.5 billion.
So expecting a bounce back from Q3.
Seems like it. They updated their full fiscal year 2025 revenue guidance to a range of $20.5 billion to $22.5 billion. Although some analyst reports, reflecting even greater bullishness, mentioned targets as high as $23.5 billion to $25 billion.
Okay, strong guidance.
But what's truly audacious, almost a moonshot, is management's projection of a staggering $40 billion for FY 2026.
$40 billion. For 2026, that's nearly double again.
Driven by the full ramp-up of their liquid-cooled lines. If they achieve this, it would nearly double their current sales in just one fiscal year. It indicates immense confidence in the sustained, explosive demand for their specialized AI infrastructure.
That's a very bold target, but maybe possible given the AI boom.
It's aggressive, definitely, but not entirely out of the realm of possibility.
And how do investors value this kind of growth, especially considering that volatility you highlighted? What do their PE and PS ratios tell us about how the market perceives SMCI compared to its peers, or even its own growth potential?
This is where it gets particularly interesting, because, as before, the numbers vary across sources, highlighting rapid changes in different calculation methods, but the underlying narrative is consistent.
Okay, what's the story?
Some reports show a TTM-PE ratio of approximately 48.2x. That reflects strong investor confidence and expectations for continued high growth.
High PE suggests high expectations.
Others show a more current PE, maybe 21.8x or 25.3x. Regardless of the exact number you pick, it's generally considered a premium compared to traditional, more mature server manufacturers like Dell, which trades around 19.9x, or HPE at 12.3x.
Higher than Dell or HPE. Makes sense given the growth.
But crucially, it's still significantly lower than an AI chip giant like NVIDIA, which often trades anywhere from 50x to maybe 85.7x, or AMD at 55.3x.
Lower than NVIDIA or AMD. That is interesting.
This discrepancy suggests potential undervaluation relative to its explosive growth prospects and its pure-play AI exposure. The market seems to be pricing in significant future growth for SMCI, but perhaps not as much as it does for its direct AI chip partners.
Even though SMCI is kind of essential for those chips to work at scale.
Exactly.
And the price-to-sales ratio, that often gives a clearer picture for high-growth companies, right? How much the market values the revenue itself.
Yeah, and the PS ratio is notably low, ranging from 1.3 by 1.5x in some reports, though another source does cite 4.8x. But even at the higher end, it's significantly lower compared to the broader tech sector's average of 8.6x.
1.3x to 1.5x PS? That seems really low for this kind of growth.
It strongly indicates the market might be undervaluing SMCI relative to its massive revenue generation. It's almost like the market is saying, we're not fully convinced by this revenue yet, so we're valuing each dollar of their sales at a discount.
So potentially a hidden opportunity for growth investors.
That's often how it's flagged, yes. A potential bargain for a company experiencing such explosive top-line growth. Furthermore, the company maintains a very healthy balance sheet, around $2.53 billion cash on hand.
Lots of cash flexibility.
significant flexibility for capacity additions, strategic investments, maybe even potential acquisitions in the future, further bolstering its growth potential without heavy reliance on external financing. It's a very robust financial picture, despite the valuation volatility.
Let's shift gears for a moment from the numbers to the real-world impact. We talked about their confidential clients, but can you paint a picture of how their technology is making a tangible difference for these hyperscalers and AI giants? Tell us a story, even if it's maybe a composite one, that illustrates SMCI's impact.
Absolutely. Imagine a scenario not so long ago at a massive cutting-edge data center, let's call it Project Olympus, run by one of the world's leading cloud providers. This particular facility was pushing the absolute limits of AI training, running groundbreaking large language models.
Okay, state-of-the-art stuff.
Totally. They had racks upon racks of the newest, most powerful GPUs, churning through petabytes of data. Everything was state-of-the-art, but they were hitting a wall.
A wall? What kind?
A thermal wall. The sheer heat generated by these densely packed AI accelerators was overwhelming their traditional air cooling systems. It was like trying to cool a blast furnace with a household fan.
Not good.
Not good at all. Performance was throttling, energy bills were skyrocketing, and worst of all, they were facing unexpected downtime from overheating components. Their ambitions for scaling AI were literally, well, melting down.
So they needed a fix. Fast.
He needed a solution. Fast. This wasn't just about faster servers. It was about reimagining the very cooling architecture. That's when Supermicro computers stepped in. They brought in their direct liquid cooling solutions, those precisely engineered racks that circulate fluid directly over the hottest components.
The DLC tech we talked about.
Exactly. Instead of just blasting cold air, which is inefficient and costly, SMCI systems meticulously siphoned away the heat with remarkable efficiency.
And the result?
The difference was night and day. Project Olympus could suddenly pack twice as many GPUs into the same physical space, dramatically increasing computational density.
Double the density.
Their energy consumption for cooling plummeted by an estimated 40%, saving millions annually and dramatically reducing their carbon footprint. Downtime due to overheating became a thing of the past.
Wow.
SMCI didn't just sell them servers. They provided a complete, integrated solution that transformed their thermal management, enabling them to scale their AI operations without fear of meltdown, accelerating their research and deployment of next-gen AI. It was a true partnership that saved them from a computational inferno.
That's a powerful example. So SMCI is clearly doing impressive, even groundbreaking things, but they're not operating in a vacuum. Who are they going head-to-head with in this high-stakes game of AI infrastructure, and how do they really stack up against these giants in a statistical showdown?
Right. They operate in an intensely competitive environment, no doubt about it. Their main competitors include established giants like Dell Technologies, DELL, and Hewlett-Packard Enterprise, HPE. These are companies with vast resources, entrenched relationships.
The big traditional players.
Exactly. Yeah. And while partners, it's important to note that NVIDIA, and Advanced Micro Devices, AMD, also act as indirect competitors, especially as they themselves move into more integrated data center solutions with their own full-stack offerings, like NVIDIA's DGX systems.
Right, NVIDIA sells whole systems too.
They do. Other players like Lenovo Group, Pure Storage, Seagate Technology also present competition in various segments, particularly in general server and storage solutions. It's a constant battle of agility versus scale, specialization versus breadth.
What gives SMCI an actual tangible edge against these massive players, especially when you consider their sheer size and market dominance? It must be incredibly challenging.
It is challenging, but SMCI's competitive advantages are quite clear, and they often exploit the very characteristics that make the giants slower.
Okay, like what?
First, there's agility and customization. Their modular architecture allows for rapid deployment of tailored solutions, often outpacing larger competitors like Dell and HPE, who may have longer product cycles, more rigid processes. This enables them to be first to ship new NVIDIA and Intel parts.
Capturing that first-mover demand.
Exactly. Second, energy efficiency. Their deep, long-standing focus on sustainable computing, particularly their direct liquid cooling technology, aligns perfectly with the increasing demands for efficiency in data centers. Power consumption is rapidly becoming a prohibitive cost and a critical environmental concern.
So their green focus is now a major selling point.
A huge one. Third, AI market positioning. Their deep strategic partnerships with NVIDIA, Intel, and AMD have positioned them as a pure-play leader, specifically in AI server solutions. Unlike competitors with broader, sometimes diluted, less specialized IT focuses, they live and breathe AI infrastructure.
More focus.
Very focused. And finally, U.S. manufacturing. Crucially, SMCI's domestic production capabilities enhance their supply chain reliability and security. That's a key advantage in the current global environment with geopolitical tensions and supply chain disruptions.
Having manufacturing closer to home helps.
It gives them better control and responsiveness, which is invaluable for large mission-critical deployments.
But, as we always say, every significant advantage comes with its own set of risks, right? What are SMCI's vulnerabilities in this competitive arena, especially against such formidable, well-resourced opponents? Where are the chinks in their armor?
Absolutely. Despite their impressive strengths, there are significant competitive risks that warrant caution.
Such as?
First, accounting concerns. Past allegations of accounting irregularities, particularly from that Hindenburg research report, and delayed financial filings have demonstrably damaged SMCI's reputation. They contributed significantly to stock volatility, including a dramatic 85% crash back in 2024.
Right, that history is still there.
It is. These lingering issues could potentially allow competitors like Dell and HPE to gain market share if trust issues persist. Large enterprise customers often prioritize stability, reliability, and an untarnished reputation above all else.
Makes sense. What else?
Second, market share. While leading in specific high-value AI server niches, SMCI's overall market share is still smaller than larger competitors who possess far greater resources and deeply established client bases spanning decades. Their specialization is a strength, but it also means a smaller overall footprint.
Harder to compete across the board.
Third, valuation sensitivity. While some analysts argue for undervaluation, others point to their relatively high PE compared to traditional server makers. Any slowdown in growth or execution missteps, even minor ones, could trigger a multiple contraction, meaning investors could re-rate the stock lower quite swiftly.
High growth means high expectations.
Precisely. Fourth, supply bottlenecks. A significant reliance on advanced GPUs from partners like NVIDIA means supply chain kinks, particularly for cutting-edge, in-demand chips, can severely impact their ability to ship products and meet customer demand. They're dependent on their key suppliers.
If NVIDIA can't make chips fast enough, SMCI can't ship servers.
That's the bottleneck. And fifth, margin pressure. Hyperscalers. Being massive customers and shrewd negotiators, they often demand cost plus pricing. This means they essentially negotiate to pay SMCI just the cost of the components, plus a minimal predefined percentage.
Squeezing their profits.
It's a volume game for SMCI, securing huge orders, but it also means they're constantly battling to optimize every single cost to eke out profits on those razor-thin deals. Can they truly maintain and expand profitability as they scale with these incredibly demanding clients? It's a delicate balancing act.
So peering into the future, what's the general sentiment from analysts about SMCI's long-term trajectory? Are we seeing a collective bullish charge, or is there a strong undercurrent of bearish caution? Given everything we've discussed, it truly feels like there's a compelling argument for both sides.
You're absolutely right. It's a wonderfully nuanced outlook. Analysts are generally, and quite strongly, bullish on SMCI's long-term prospects. This optimism is largely due to its incredibly strong positioning as a pure-play leader in the AI server market and that indispensable close relationship with NVIDIA.
The market likes the AI focus and the NVIDIA link.
Definitely. Wall Street's consensus rating is a moderate buy. However, as you rightly point out, there are undeniable near-term concerns about volatility and potential margin pressure, which creates that complex, nuanced outlook. It's a situation that screams high conviction, but also carries commensurate high risk.
So attractive, but maybe not for the faint of heart.
For those who are comfortable with a bit of a thrill ride, it's a captivating stock to watch, yes.
Can we paint a vivid picture of the best case and worst case scenarios for SMCI? For us, the learners, it's incredibly helpful to understand the full spectrum of possibilities. Like, imagine what a bull charging through a data center looks like versus a bear lumbering through.
Okay, let's sketch out the bullish case for SMCI, the optimistic, high-growth scenario. If AI server demand continues its explosive, almost exponential growth, driven by those increasing computational needs for massive AI models.
Which seems likely.
Right. And if SMCI maintains its lid in both modular and critically liquid-cooled solutions, we could see price targets soar to $1,000 plus gain. This isn't just a speculative number. It's rooted in sustained, aggressive growth, fueled by being the infrastructure provider of choice.
$1,000 a share. Wow.
There's even a significant rumor, or maybe hope, of potential inclusion in the prestigious S&P 500 due to its market cap growth and liquidity. That would trigger a massive wave of passive institutional investment and bring broader market acceptance.
The S&P 500 inclusion would be huge.
Massive. Continued margin expansion is also key here, especially as higher margin AI racks, which command a healthy 20-22% gross margin compared to their historical 12-17% for general servers, become a larger and larger part of their product mix.
Better margins driving profit.
Exactly. And management's bold FY 2026 revenue target of $40 billion. If they achieve that, it could absolutely justify a premium valuation. This scenario sees SMCI as a primary, indispensable enabler of the AI revolution. The probability of this scenario playing out significantly, I'd put it at about 65%.
65% for the bull case. Okay. And the darker side of that crystal ball, the bearish case. What could truly trip up this high-flying company despite its current momentum? Where are the potential pitfalls and landmines?
The bearish scenario involves several significant interwoven risks. Firstly, a broader, deep economic slowdown. That could lead to a significant reduction in corporate IT spending and new data center build-outs, directly impacting demand.
A recession would hurt demand.
Definitely. Secondly, intense competition from larger players like Dell and HPE could aggressively eat into SMCI's market share, especially if they manage to quickly catch up on specialized AI server offerings or leverage their scale more effectively.
The big guys could fight back harder.
Thirdly, even NVIDIA itself, currently a cornerstone partner, could evolve into a more direct competitor if it decides to develop more in-house full-stack server solutions, potentially cutting SMCI out of some high-value segments.
NVIDIA competing directly would be tough.
Very tough. Furthermore, if their guidance disappoints in upcoming earnings calls, or if their valuation becomes too stretched, say, PE consistently stays above 40x without exceptional growth to back it up, we could see significant profit-taking. Price targets could potentially drop back to the $600-$700 range.
Valuation concerns could trigger a sell-off.
And persistent accounting concerns, as we discussed, are a very real lingering issue. Critically, their history of missing EPS estimates, SMCI beat EPS estimates only 25% of the time in the past 12 months, far below the industry average of 66.5%.
Only 25%, that's not great.
It contributes to extreme volatility and could lead to significant downside if issues resurface or performance lags. The probability of this bearish scenario holding significant sway, I'd estimate around 35%, largely driven by external economic factors or a significant misstep in execution or guidance.
So it's a high-growth, high-stakes play, a lot riding on continued AI adoption, flawless execution by SMCI, and navigating that competitive landscape.
That sums it up well. For anyone tracking SMCI, the next major event that could significantly impact its trajectory is their upcoming earnings report, expected on August 5, 2025, for their fourth quarter of fiscal year 2025. This will be a critical inflection point.
August 5th, okay. What are the key numbers we should be looking at? What are the street's expectations for this report, and where might we see potential surprises?
Analysts are currently expecting diluted EPS around $0.44, with a tight range of 6.8 or 150 cents. For revenue, the expectation is approximately $5.98 billion, ranging from $5.6 billion to $6.08 billion.
Okay, so around 0.44 EPS and just under $6 billion revenue.
However, it's worth noting a significant discrepancy. Some analyst reports also cite a street EPS estimate as high as $1.72 for this quarter.
Whoa, Gieller's 44 cents versus $1.72. That's a massive difference in expectation.
It really is. This wide variance itself highlights the differing calculations or expectations within the analyst community and the potential for a genuine surprise, either positive or negative.
Given that range, what are the key things that could genuinely move the stock on that day? Beyond just the headline numbers, what specific insights or metrics will investors be scrutinizing most closely?
Several catalysts could spark a significant reaction. Strong Q4 earnings, especially if they exceed expectations, could act as powerful confirmation of SMCI's operational strength and recovery from past accounting concerns. That could potentially drive a significant rally.
A beat could restore confidence.
Exactly. Even more critically, positive guidance for FY 2026, particularly if it explicitly reaffirms that bold $40 billion revenue target management projected. That would strongly reinforce bullish sentiment and could lead to substantial upside.
Guidance is key, especially that $40 billion number.
Absolutely. We'll also be watching closely for insights into the liquid cooling attach rate, how many servers are being sold with DLC, a high attach rate for liquid cooling, The higher margin product would be very positive for future profitability.
Higher margins are good.
And any updates on the overall supply of next-gen GPUs like NVIDIA's Blackwell will be crucial. Their ability to ship is directly tied to GPU availability.
Right, the supply chain factor.
And of course, every earnings call comes with its own inherent set of risks. What are the potential pitfalls or negative surprises that could lead to a significant adverse reaction for SMCI stock on August 5th?
Yeah, what's the downside risk here?
A key risk is another EPS or revenue miss, similar to Q1 FY 2025, where they missed EPS estimates by a substantial negative 24.46%. That would likely trigger a sharp sell-off, as it would fuel renewed concerns about execution, demand, or competition.
Another big miss would hurt badly.
Also, if they fail to adequately address any lingering accounting concerns, or if new questions arise around their financial reporting, investor confidence could be severely dampened, leading to a rapid reevaluation.
Trust is fragile.
Very. SMCI stock is known for its high volatility. Its beta is 1.4.
Beta of 1.4, meaning it moves more than the market.
Right. For every 1% move in the overall market, SMCI tends to move 1.4%. It amplifies both upsides and downsides. Historically, shares have moved I9 for 12% on an earnings miss or beat and can gap 20% on significant guidance shifts. The market is exceptionally sensitive.
So expect big moves around earnings.
For those who follow trading strategies, especially with options, what does this inherent volatility imply around the earnings event? What are sophisticated investors likely considering?
Yeah, what does this mean for traders?
Well, the implied volatility around earnings is quite high, currently hovering around 85%. This means options traders are pricing in an approximate $7 move in the stock following the report.
A $7 implied move, okay.
Reflecting the market's expectation of a substantial price swing. This high IV often leads to strategies aiming to profit from large price movements, like straddles or strangles, which capture profit from volatility regardless of direction.
Playing the volatility itself.
Alternatively, for directional bets, sophisticated traders might look at buying out-of-the-money calls on any post-earnings dip, anticipating a rebound if fundamentals remain strong. Or, to manage downside, selling put spreads.
Various option strategies.
But, and this is absolutely critical, this information is for educational purposes only. It is not financial advice. All trading, especially with options around earnings, involves significant risk and is not suitable for all investors. Please consult a qualified financial advisor before making any investment decisions.
Absolutely. Good disclaimer. So what does this all boil down to for you, our curious listener? Supermicro Computer is undeniably a company that found itself in the perfect place at the perfect time. Its deeply focused strategy on delivering high-performance, endlessly customizable server solutions, especially with their pioneering liquid cooling for the demanding AI era, well, it's propelled it to the absolute forefront of the industry. They're not just a hardware vendor. They're providing the essential, high-density, energy-efficient infrastructure that underpins the entire AI revolution. From massive hyperscale data centers powering our digital lives to cutting-edge AI startups developing tomorrow's breakthroughs.
That's the essence of it, beautifully put. SMCI is fundamentally a high-growth AI infrastructure play with undeniable momentum. Its lower PE and PS ratios compared to some of its chipmaker peers suggest a potential undervaluation and considerable room for continued growth.
Making it attractive for some investors.
Making it an attractive consideration for investors who are comfortable with volatility and are seeking direct exposure to the AI boom, but perhaps beyond just the chipmakers themselves. They offer a unique, specialized way to participate.
However, as we've explored in depth, the road ahead isn't without significant challenges. Risks like the lingering shadow of past accounting concerns, intense competition from much larger, more entrenched players, and the inherent supply chain dynamics. They all warrant a degree of caution. The upcoming earnings report on August 5th will undoubtedly be a critical litmus test for its continued trajectory. How management addresses these concerns, especially around guidance and execution, will be absolutely key.
Absolutely key to maintaining investor confidence and sustaining its truly impressive growth. Ultimately, for investors, SMCI represents a quintessential high-growth, high-beta play on the continued, undeniable expansion of artificial intelligence.
High risk, potentially high reward.
It offers the potential for significant rewards, but it also comes with a commensurate level of risk that needs to be carefully considered. The coming quarters will be absolutely critical in demonstrating its enduring ability to execute, maintain its growth, and manage its challenges. It's truly a fascinating company to watch.
And a crucial piece of the AI puzzle. Here's a provocative thought for you to mull over as you go about your day. In the grand chessboard of artificial intelligence, we often celebrate the queens and kings right. The Googles, the NVIDIAs, the OpenAIs, the companies making the big flashy moves.
The headliners.
But what about the crucial rooks and knights, the foundational infrastructure providers like Supermicro? As AI becomes not just a buzzword, but an omnipresent, indispensable part of every industry, every business, every aspect of our lives, will the true value and competitive advantage shift even further towards the invisible yet absolutely indispensable infrastructure that underpins everything, elevating these picks and shovels players to unprecedented new heights?
An excellent, truly thought-provoking question to ponder, indeed.
Thank you for joining us on this deep dive. We hope you feel far more informed, enlightened, and perhaps even a little provoked about Supermicro and its pivotal, often underappreciated role in shaping the AI landscape. Until next time, keep digging deeper into the knowledge.